All right, so the first rule of making videos on YouTube is going to be always check the spot price. It's kind of hard right now to get a read on gold prices. Yesterday it was at 1680. And if you were to ignore everything else, that basically meant that we're looking at the same price that we had 12 months ago. Felt a little bit like a redo. I know a lot of people thought the price of gold was only going up based on all the popular advice, so it's going to give a mixed outlook on gold if that's where your head was. And I don't know where you stand on the price, but if you're holding on to gold for years to come, then a lower purchase price today is going to be a good thing. So everyone has that different selling horizon for the gold, and I'm not even sure what mine is personally, but since I think of gold more like a retirement account than like a short-term investment, I have a solid 15 to 20 years to buy it yet. So I'm definitely happy about a lower price. And I try to stop and do some math once in a while. If I was to stick to my current half ounce per month buying schedule, that would add about 100 ounces, give or take. It depends on how long I bought within that 15 to 20 years. And I've seen surveys that mention needing $2.5 million for retirement. So if I just went with that number, it'd be pretty safe to assume that at least 10% of that could come from the gold if I'm buying for 15 to 20 years yet. Now, none of those numbers are actually specific to me. I just bring them up to point out why I personally like the correction we're seeing right now, and I think it's good for everyone to do that math. And I don't know what your math looks like or how long you're going to be buying, but if it's more than a few months, I'm guessing that you don't mind the price rewinding back to where they were a year ago prior to the run-up either. It just saves us some cash. The part that's different, of course, though, between now and a year ago is that the premiums are way higher and the availability is way lower. So if you're looking to continue buying regularly, or maybe you're even getting back in after taking some time off because of the high prices, you're going to be working a little bit harder to find what you want at a decent price. I always start locally, and I do have a few local options, both at the local coin shops and then with the broker, but even that doesn't always pan out. And if I'm looking for something specific, or I'm just looking for the best price, I'll usually pull up a price comparison tool like findbullionprices.com. So I don't have to constantly go to 20 different sites to see what's available and at what price. Now, I'm going to link that site in the description for now, but you need to be careful if you're watching this video too far from the published date, because I use that site today, but I don't know anything about who runs it. It could change down the road. Right now, though, it scrapes prices and availability from all the online dealer sites that I've used in the past, plus a few more. So it saves a huge amount of time. Now, I'm going to leave a link to the Discord server in the description as well if you'd like to take a look there too. There is a fair amount of crowdsourcing going on the server, so anytime a deal shows up online, it seems like someone on the server tends to be talking about it there as well. I don't know if that necessarily makes it easier because there's going to be a fair amount of chatter about things that you might not be looking for. There are a lot of other options to check out as well. I have some friends on Instagram who've recently launched the Metal Merchant, so there are just a lot of places to find deals. The key to buying right now, though, is going to be discipline, and that's not really different than any other time, but not having it right now is just going to cost you a lot more. If you're just online buying because you saw that the spot price is low, you could end up paying more than you paid a few months ago when spot was still on its run. You can find deals though. I just spotted a great deal on a Britannia last night. You just have to be patient and either look a little bit harder or a little bit smarter. Another thing that might be a little bit different this time around is how picky you can be. I mentioned a few videos back that I'm open to Britannias or kangaroos if it means saving 7% over an eagle or a buffalo. There are a few people in the comments who've been warning about this for a while now. As demand spikes, you might not be able to find your typical first, second, or third options. At least not if you want to get a reasonable price. And I imagine it's a short-term issue because falling prices tend to show falling interest. So lower demand will eventually smooth out both the availability issues and the currently wild high premiums. My outlook on gold is still as positive as it was a year ago when I started making these videos. Now, I think it's safe to assume that we're going to see lower prices yet, but again, I'm looking at it as a good thing because I will take lower purchase prices since I'm going to be buying for so long yet. And the last year should actually serve as an example of what gold can do in terms of price. And as long as you realize that it can cycle down as well, then I think it's still a great asset to store your cash, your wealth, however you want to look at it. My plan is to continue averaging in with monthly purchases. I'm going to do that through retirement age. And then again, that probably would add about 100 ounces, give or take, depending on whether or not I stuck to my current plan as is. And hey, before anyone starts planning a heist, I'm going to be vaulting a lot of that along the way. I mean, it just isn't all going to stay in my house. But this whole idea is part of my unofficial retirement plan, meaning I hope to not need it. Anytime I see articles on how much you need for retirement or I see somebody's personal projections, their calculations, I always wonder if they're factoring in a variable to their formula to account for the possibility of change. I mean, you never know if the market's going to crash at the wrong time or you have a medical emergency or really anything comes up that you're not expecting. And I personally don't want to be the person that forgot to put that X into my formula. So the point of this whole thing is really just to say that I think it makes a lot of sense to keep buying. I like the idea of building up a relatively significant amount of hard assets because that just adds a layer of security against those unexpected variables. And it also makes every bit as much sense as it did a year ago or even 10 years ago, even if the spot price has been trending down after nearly a year of it trending up. I'd say that this is a good chance to buy at a discount as long as you're being careful about how you're buying, or at least being aware that you're paying a bit of a luxury tax if you're not being careful. Regardless, spot being at $17.15 today is a lot better than spot being $200 higher at $19.50. At least for those of us who aren't ready to sell. So, you can call this a pullback or correction, and I don't personally think this is the bottom, but it's definitely buying at a discount compared to last year. Let me know what you think. You feel like we're getting a discount, or do you think we have further to go? I'd love to hear what you think. And again, I'll put those links in the description. Be sure to check that out. Thank you again for watching. I always appreciate your time. Hope you're doing well. Take care.